Welcome back to our channel, where we uncover the true economic ripple effects of global events. Today, we're cutting through the noise to bring you the cold, hard facts on how the escalating tensions between Iran and Israel are poised to impact the global economy, your daily life, and the future of trade. Experts worldwide are issuing stark warnings and precise forecasts. Let's dive into the 10 major predictions you need to know. Forecast number 1. Analysts predict that with escalating tensions in the Middle East, Brent crude oil prices could soon reach $80 to $90 per barrel. This isn't just a possibility. It's a strong projection reflecting the heightened risk in the region. Forecast number 2. Should the conflict escalate to a full closure of the critical Strait of Hormuz, experts warn that oil prices could skyrocket even further, potentially surging to an astonishing $130 to $150 per barrel or higher. The implications for global energy costs are immense. Forecast number 3. Goldman Sachs, as recently as June 23, 2025. As a specific projection, if the Strait of Hormuz is even partially blocked for just 1 month, they forecast Brent crude will hit $110 per barrel. This highlights the extreme sensitivity of energy markets to disruptions in this vital waterway. Forecast number 4. The impact isn't just on oil. If current elevated ocean freight rates persist through the end of 2025, global consumer prices could see an overall rise of 0.6%. This means you could feel the squeeze on everything from electronics to everyday goods. Forecast number 5. Digging deeper into inflation. Experts project that a 10 percentage point rise in shipping cost inflation alone can push up overall inflation in OECD countries by approximately 0.5 percentage points. The cost of getting goods to market directly impacts what you pay. Forecast number 6. Looking at the broader picture, Capital Economics warns that a wider regional war could slash global economic growth by 0.4%. At the same time, it could trigger a significant 1.5% increase in inflation, pushing us towards a challenging period known as stagflation. Forecast number 7. The World Trade Organization, or WTO, has painted a grim picture for global trade. They've indicated that global trade volumes are now expected to contract by 0.2% in 2025. This is a stark downgrade from their earlier, more optimistic projection of a 2.7% expansion. Forecast number 8. In an adjusted scenario for 2025, the WTO projects that global goods traded could decline by almost 3% relative to their baseline forecast. This stark drop is attributed to a combination of increased tariffs and rising policy uncertainty worldwide. Forecast number 9. Furthermore, the WTO has revised its global GDP growth projections for 2025 downwards from a baseline of 2.8% to just 2.2%. This revision directly reflects the far-reaching economic consequences of trade policy, uncertainty, and geopolitical tensions. Forecast number 10. Finally, focusing on Europe. Experts suggest that if Red Sea shipping disruptions become protracted, the euro area's consumer prices could see an additional increase of around 0.30 percentage points in 2025. This shows how regional conflicts can have continent-wide inflationary effects. These forecasts underscore the profound and widespread economic consequences of the Iran-Israel geopolitical nexus. From your gas tank to your grocery bill, the ripples of instability are set to impact every corner of the global economy. Understanding these predictions is the first step in preparing for what lies ahead.